Hello and welcome everyone to Oil Asset of the Day, where we'll be looking at oil prices for the week ahead. First of all, what do you need to know for this week? Well, essentially hedge funds and money managers, they have again increased their overall net long positions on oil in the latest week. That said, yesterday we in fact banked our long position on Brent crude oil, banking 325 points profit on the remainder of our trade. So we're actually flat on oil at the moment, awaiting the API data, and also we're awaiting Wednesday's oil inventories data, where we are expecting the overall data is forecast to show another fall in overall oil inventories data, but we want to watch out for this data, which is going to be coming out later on after 9 o'clock in the evening, London time, and also on Wednesday at 3:30 p.m. as well. Overall, for this week, we are looking at ranges within approximately a 300-point range for oil. So I'm looking at a range of approximately $56 per barrel, up to that $59 handle. So we're looking to trade that range. Over the month of July, oil is normally quite range bound. It does tend to consolidate, move sideways. So for us, we're personally looking to take advantage of trading that range, banking our profits yesterday, 325 points, getting flat, but then looking for opportunities on either the API data or Wednesday's oil inventories as well. Bear in mind, on Wednesday, we have the minutes of the FOMC as well. The US dollar has broken out to 3-week highs following on from non-farm payroll data on Friday, and that has also put a little bit of pressure on oil at the end of last week and also just yesterday as well, until we've started to see a rotation back towards the upper end of that channel with the expectation of a fall in oil inventory data. So right now, US oil is trading at $58 per barrel. I would look at the potential, if we do increase momentum here, to potentially tap 59, even 60 could see a magnetic level for the oil prices to come up to that major level of resistance, which is usually the case for oil. Tends to move very well with those round numbers. So if we break out above $59 per barrel, we could tap $60 per barrel before seeing some degree of profit taking. But from there, if we start to see a rotation lower, in fact, oil prices today, they're just consolidating within the upper end of the range. If we do start to see a sell-off, I would look for a revisit back towards $56 per barrel. And from that zone, look at evidence of buyers coming in. Ultimately, I would be interested to see if we do see oil prices this week come back towards that major level of support, around 56 to 55 US dollars per barrel for WTI crude oil. As we mentioned previously, it's really those big round numbers for oil where you can see a lot of trading activity, buyers and sellers, and often really good opportunities from a risk to reward point of view. Buying, for example, close to around the 55 US dollar per barrel handle, looking at selling opportunities around 60. So overall this week, we're expecting range-bound trade for oil, but as always, watch out for narratives from the Federal Reserve. We have Jerome Powell speaking on Tuesday. We have the API data as well to watch out for later on in the day on Tuesday, oil inventories data on Wednesday, and the minutes of the FOMC. All of these can be factors in affecting oil prices. Also, if you are trading oil, it's also very important that you're kept updated with the latest research and updated with the latest narratives with respect to both the US-China trade negotiations at the moment, which can have a very significant impact on oil demand, and also the situation with respect to the USA and Iran at the moment. That geopolitical risk, when that flares up, often that can see oil very quickly get a bid as well. So it is important that you keep on top of those news items as well. So with that, as always, I wish you good trading, and we'll see you back here next week for Oil Asset of the Day.